all things crypto and the latest developments. That's what today's episode on the Easy Does It podcast is all about. My name is DJ at Large. Thank you for pressing play. We've actually reached close to 300,000 downloads. How crazy is that? With listeners across 164 countries. What a wow. So a big shout out to people out in the United States, Namibia, the United Kingdom, Netherlands, Eswatini, Qatar, Germany, where some of our listeners are located. Things are a little bit different in studio. We've even got cameras. I'm starting to feel very, very famous. But today's not about me. It's all about cryptocurrency, something that I'm very intrigued and I'm a big crypto investor, but sometimes cryptocurrency is misunderstood, it's unfairly criticized, but I absolutely love it. So I've brought in two gentlemen who understand it better than me. And if you are interested in the likes of Bitcoin, Ethereum, Shiba Inu, Chainlink, Decentraland, the Sandbox, EasyCrypto is where you need to be. Very simple. So all things crypto with the EasyCrypto head of product, Don Kruger, hanging out with him, and of course the CEO, Earle Loxton. Gentlemen, welcome to the Easy Does It podcast, man.
Thanks for having us.
Thank you, DJ.
So we've got Earle who's virtual. We've got Don who's in the studio with us. Before we get into the conversation, I've got a random crypto question for you guys, right? So I'm going to start with you, Earle. It's the same question as well for Don. Earle, if your crypto wallet or your portfolio could speak, what do you think it would say?
Good one. In general, my wallet would probably say, "Leave me alone." I think it's my it's my investment philosophy to not be a day trader. So I'm much more here for the long term. And I see crypto running in longer cycles. So in general, I suppose that's what mine would say. It's just let me alone.
Don, what would your crypto wallet, your portfolio, would it say the same thing? Just leave me alone, stop tinkering and buying and selling. What would yours say, man?
I think mine would say dinner's ready.
Ooh. So that means your portfolio is looking really nice at the moment.
Yeah, I mean, during the previous bear market when crypto was at $16,000, this is obviously not just a trade for me, it's my career. And, when there's that much blood in the market, we had to ask ourselves, is it worth doubling down or is it the end of crypto? It's never the end of crypto, by the way. But, it's easier said than done by the dip. So invested during the bear and caught some of that upside now. So dinner's ready. Yeah,
so we know there's going to be people that are jealous who have not invested in crypto. They are not on EasyCrypto. So we'll make them a little bit jealous. And I think where we should start is with you, Don. For the crypto fundies, those that have heard of crypto, but they're a little bit nervous. There's so much around it. Could you explain what cryptocurrency is?
Mitochondria is the powerhouse of the cell. I've got a rehearsed answer. So cryptocurrency is a peer-to-peer decentralized transactional technology at face value. And you can gather a lot from just the title of the initial Satoshi Nakamoto's white paper.
Yeah.
So Bitcoin, the whole premise of it is it's peer-to-peer. It's decentralized. There are no banks. And because of that, the point of failure is distributed. It's really hard to take down that network. But defining it, it's a whole story. There's a lot of depth to it. So I would start off with a peer-to-peer decentralized transactional technology, and maybe Earle can build on that definition a bit.
Yeah, Earle, do you want to add on to that for the crypto fundies?
No, don't. No, I think you're doing a good job there.
Yeah, because, I see it as internet, as money for the internet, and everything you can do with the rand, with the dollar, you could essentially do the same with crypto. And the beauty is that, we've had an entire episode where we've tried to break it down, and this is almost like a build up to that. So people can always go back and rewind to that episode. But I think everything you've mentioned is exactly that. I see it as money for the internet, and there's great tech behind it, but very much what you've said, Don. Earle, for you, the one thing that I mentioned was around the misconceptions on crypto. What would you say is the biggest misconception that you come across?
Look, I think misconception is probably false expectations often. I've been in conversations where people assume that because crypto as an investment just has these stellar rises, that it's a guaranteed win to invest in crypto. So this is probably my bugbears, where people invest hand over feet and well, I suppose head over heels, but with just false expectations about what it is. It's not a guaranteed forever honeymoon. It's got a beautiful, beautiful, bright future, but you have to really do your homework and don't expect this is not a lottery. This is not a casino that just keeps paying out winnings. So my message would be to those, just apply due diligence, be careful. Yeah. Don't invest money that you can't afford to go without for at least some time. That would be mine.
Yeah, Don, are you coming across those types of misconceptions? What are you hearing from people?
Yeah, the same. Obviously, there's a lot of interest now that the prices are topping out, hitting all-time highs again across various countries on the planet. And I would say, because there are so many misconceptions, first understand the technology and make the decision of, do you believe in it or not? So the fundamental appeal of blockchain technology is that there is no central point of failure and it's fault tolerant, right? So it's sort of one of these Elon Musk-esque kind of perspectives where if you had to put society on hyperlapse and you had to choose a medium of exchange for everyone to operate off of, and we take a glimpse at history, well, democracies rise and fall, right? Fiat currencies come and go. This is possibly, and let me just start the conversation with Bitcoin. I do think there should be some kind of distinction when you're having a conversation about cryptocurrency in general. What kind? But I'll start with Bitcoin because it is the most distributed, the most decentralized. What kind of technology can handle this hyperlapse of humans going at war, of currencies being printed infinitely?
Yeah.
Hyperinflation. So you need to understand, if you are investing in it, do you believe in what you're investing in? Your belief and participation in the system, they actually mean nothing on their own, right?
Yeah.
So the network only has value when everyone believes and participates in that system. Same with any fiat currency. It's actually a belief system.
Yeah.
So the longer it stands the test of time, the more it's going to be more comfortable for our grandkids one day, because they're going to look at us, they're going to be like, well, we don't want to use your cotton and nylon-based paper because you guys just printed all of that. Bitcoin's been around all my life and all your life and however long it will be around, which is mathematically indefinite unless an asteroid hits us. Understand the technology, and if you believe in a future that is decentralized, then you should definitely consider crypto assets.
That definitely makes sense. I mean, underscoring what you're saying is not only believing it, but having an understanding of what it's all about. Because sometimes people make the mistake of, prices are high, I'm just going to invest because I could potentially make some sort of money. And that leads me into my next question for you specifically, Don. And it's around, what are the primary drivers that are basically shooting up the value of cryptocurrencies at the moment? What's going on? We know the prices are all-time highs. What's exactly going on?
Well, it's a tug and war between buyers and sellers right now. And because ETFs have finally hit the mainstream, so big institutions have made crypto accessible via traditional legacy markets, we are seeing big institutional capital enter at a rate where the buyers are just outpowering the sellers. So we're just seeing a lot of price pressure upwards right now because of that institutional capital. And that is the primary reason right now. And Earle has a lot of context as well about the ETF action at the moment. Earle, do you have any thoughts to share there?
Yeah. I'll circle back on the ETF. I think what could lead us into that, Earle, is outside of the demand and supply factor, because we know stuff like Bitcoin, there's not an unlimited amount of it. One thing that also keeps coming into the conversation is halving, and it seems to be playing some sort of role as well. I mean, can you explain a bit to the fundies what halving is, and what impact it has on Bitcoin and the other digital assets?
Sure. Yeah. So in Bitcoin, the halving is a major event. It occurs every 4 years, and it is the action of the rate of new Bitcoins being released into the world. That rate is halved every 4 years. If you think of a bath being, I often use this analogy of a bath being filled. Now that bath is just over 90% full of water already, and the tap's running at a certain rate, and every 4 years we go to that tap and we halve the rate at which the water's flowing in. So this is exactly what happens to Bitcoin. It is ordained in the code that rate, that tap will halve every 4 years. So effectively what this means, we in about 40, 50 days from now, somewhere, well, maybe a bit sooner, but it depends on the network. That halving effect will happen. That means we're going to go down from mining 900 plus minus 900 Bitcoin per day to down to 450 Bitcoin per day. So now what does that mean? This is a supply shock. This means new Bitcoin are becoming scarcer and scarcer. So every 4 years, this rate of new Bitcoin, because of the halving, just becomes absolutely digitally scarce. And that creates a wake up in demand, realizing how scarce this gets. Again, the bath is 93% full. We've mined 19.5 or 19.6 million Bitcoin so far, and we're only going to go to 21 million Bitcoin ever. So new supply is really running out, and that's the effect we're seeing.
This is such an interesting one, because it ties up nicely with the supply and demand that you mentioned with the halving. But I'm also thinking, Don, what else around the world of crypto is adding to its value and to its appeal? Yes, there'll be price surges because of the supply and demand, but what else around the crypto coins and maybe even the communities? What else is creating the value around it?
I would say another brilliant use case of crypto right now is global remittances. Mm-hmm. So if you wanted to move your assets anywhere on the blockchain, well, the blockchain is like a web across the planet. Mm. And if you compare that to moving your money via banks, well, what fiat money is really right now are just numbers on databases sitting across little nodes of banks across various countries.
Yeah.
And those numbers are just one keystroke away from being 1 rand to R1 billion. A few keystrokes rather. 7, 6. Anyway. So the premise is that now you have this web of a blockchain where everyone participates on the same system. You're not operating on separate databases trying to send each other money. And that's a difficult process if you're trying to keep the integrity of your fiat money intact. Which is why global fiat payments can take up to 5 days, sometimes even more, because they have all of these bureaucratic processes and releases to make sure that those keystrokes remain intact, to make sure that the integrity of the numbers in those fickle databases remain intact, and that can be slow. Now, with blockchain, you don't have to worry about that. Regulation actually doesn't have to cover the integrity of the network itself, because the blockchain is mathematically encrypted. Bitcoin is the most deeply encrypted system on planet Earth. It is bigger than any government right now. Even if they allocated all of their resources to try and take it down to decrypt the network, they wouldn't even be able to muster up the financial energy and resources required to take it down for a split second, because it's so deeply encrypted. Yeah, it's unbreakable, and that's that's the beauty of it, but it's also what is scaring governments right now.
Yeah, I think the other thing that is scaring governments and scaring even individuals, Earle, is around regulations. And I know there's quite a number of updates around, your regulatory measures for cryptocurrencies. Can we maybe touch on some updates? What's happening within the regulation space?
Sure. If we look at situation in South Africa, the Intergovernmental Finance Agency working group came up with quite an extensive list of recommendations. This is a body that consists between Reserve Bank, SARS, the Financial Services Conduct Authority, and I can't remember the other one or two. Essentially, trying to fit crypto industry into an existing framework. You see, what the recommendation effectively is to say, let's use what is already existing in terms of financial laws in South Africa and see if we can retrofit crypto into that. And then in time to write and promulgate new laws that will speak specifically to crypto. So where we are at the moment, crypto's been declared as a financial product, which already brings some protection to consumers. Financial service providers, or let's call ourselves crypto asset service providers, will, as of November last year, all of us had to register as FSPs, or at least be in the process of registering as a financial service provider. Again, protection to the consumer. Up to that point, there's been absolutely no protection to the consumer. So hence we had all these Ponzi schemes and illegal systems running and with no recourse for the consumer. So all of that's in place. Right now, most important to the regulators is to make sure that we are applying anti-money laundering measures. So it's essentially around know your customer, making sure that the source of funds are legit, things like that, making sure that these clients exist, etc., etc. So it's a slow process. It's a step by step. It's a gradual process of getting South Africa, well, first of all, off the grey list. So that would be a good thing for us to apply proper measures. Also to help us, this bad grey list that South Africa is finding itself on at this stage.
Yeah. Just to add to that as well, it's around the ETFs. I know earlier in the year, lots of news came out around the Bitcoin ETFs, and I'm curious to know from you. How might this influence the long-term future of Bitcoin and potentially other cryptocurrencies?
Yeah, look, it's been in the making for a while. ETFs, specifically spot ETFs in the US, eventually came through. We've got 11 of the biggest ETF suppliers in the US, including BlackRock and Fidelity and a few others. So effectively what ETFs do is they bring investment into crypto to the institutional investor and also the investor that's not really au fait with investing in crypto and holding passwords and all sorts of understanding airdrops and things like that, and simply want to just take part in this bull market or this cycle that we're in of crypto at the moment. So it's absolutely blown the supply out of the water in terms of there's just simply not enough new Bitcoin being produced at this stage to fill the demand of these massive funds. And it's a good thing. It's good for price because it's obviously putting a lot of pressure on price with such limited supply. So it's just to give you an idea, the amount of Bitcoin that's currently being absorbed by these funds is in the vicinity of 10,000 Bitcoin per day. So 10,000 is the total consumption of these ETFs. And right now we are producing 900 Bitcoin per day. And, once we once we have the halving, it's going to go down to 450 Bitcoin per day. And these guys are taking up 10,000 a day. So we're in the billions of dollars in terms of the flow going to the ETFs. And this is, I don't see it subside. It's not subsiding yet. So I think there's a massive catch up from the institutional, like Don said earlier, there's a huge inflow. Institutional money is coming in at an astounding rate that we certainly have not seen in the previous cycles. You know, we've had reasons and explanations for the previous cycles, and this is certainly one of the best supporting arguments for the current cycle that we're in.
Yeah. Don, I know did you want to add something to that as well?
I did. I think there's an interesting discussion around ETFs and their current structure as well, and what legacy ETF structures are meant to represent. So your exchange-traded funds typically offered investors this diversified instrument that gives broad market coverage, right?
Yeah.
But now you've got this Bitcoin ETF. It's only Bitcoin.
Focusing on one thing.
Yeah, so it's like an ETF, but it's only a single asset inside the ETF. And I think we're only seeing the beginning of crypto assets in the ETF space, because there are more crypto assets than Bitcoin out there, and people want exposure to those assets. They want exposure to the indices and the markets, right? So I think what we're going to see next is them launching these new ETF structures, pretty much similar to the structure that the EC10 is at the moment.
100%. I was thinking about that as well. Yeah.
Yeah, so it's just the start, and I think we are seeing a lot of institutional capital flow into Bitcoin because of the single isolated Bitcoin structure right now. And then as the market, the US market in particular, begins to build the capabilities of more sophisticated instruments, I think we're going to see altcoin season potentially outperform Bitcoin.
Yeah, I definitely agree with you. So I'm going to ask you, gents, to look ahead into the future, to take your crypto crystal balls and let me know what you guys think the future of crypto looks like. There's some upcoming developments. There's so much going on within the market, and I'm just keen to get your guys' personal opinions on what you think the future holds. Earle, do you want to go first and just tell us what do you think is going to happen in the coming weeks and months?
Yeah, I think the future is obviously a function of the recent past in my books, in the sense that gold was the store of wealth in the industrial era, revolution. I think digital currencies, cryptocurrencies, crypto assets will be and continue to be the store of wealth for the digital age. You know, that's where we are right now, and what's exciting is that we're now seeing so many exciting technologies converge in a sense. You know, we got blockchain, we got AI, we have devices, we have virtual reality, extended, augmented reality, and all these things are now combining in what you may call the Web3, where current crypto will be the currency. It's the internet. What the internet brought to the world, crypto is now bringing to the digital web, to Web3. It is simply the base layer that it's going to be run on. And what I see is a continued demand for Bitcoin, in my books, digital gold. So that's going to be your store of wealth. It will be until infinity, I believe. And then all the other layers, or all the other networks that provide services, and the layer that things are built on, like Ethereum and Solana, and many of the others. So that demand for those coins will remain as well, and that's in my books going to be putting pressure on price, upward pressure on prices. We're definitely seeing a cyclical sort of movement to the markets, in my books, again correlated to the 4-year cycle of halvings. So of course there will be pullbacks. I see a lot of pullbacks on the way to the peak of this bull market. It's traditionally or historically it's always been, it can't just keep going up. So at some point things do cool down. Typically what we're seeing now are these pullbacks where because crypto is so often leveraged, there are big trades on leverage, and when price goes slightly out of their expectation, there's an overreaction. So we're seeing these violent swings back down, and then they're caught, and the bull trend continues. So I see a lot of choppy waters on the way to the top, but it's very exciting, So it's we're loving every moment of it.
Yeah, definitely. Don, I mean, what do you think the future looks like?
I think there's two narratives here, two futures, and I'd like my grandkids to actually look back at this in 50 years. It'll be interesting to see how right I was. I think the first is a transition in the way in which the macroeconomic psyche acknowledges Bitcoin, and that acknowledgement will be Bitcoin as a safe haven asset. So it is algorithmically secure. Try to bomb Bitcoin. Good luck. Try to bomb the dollar or the rand. You could hit a few buildings and you could take it out. You can't do that with Bitcoin. It is algorithmically strong. So the next time we see an economic crash, the magnitude of 2000's dot-com bubble or the '08 housing crisis, when people start to understand that fiat is fickle, and I know it's a scary thing because we all wake up every day and we chase the darn paper. But when we all start to collectively realize that fiat is fickle, and we start realizing that we need something that we can't break, then we will start acknowledging it as a safe haven asset. But unlike gold, Bitcoin actually has utility behind it. So gold can conduct electricity and it makes for great jewelry. Awesome. Bitcoin can do a little bit more than that as well. So it can also buy coffee for you once our technological rails are set up. So that's also the next phase, is people getting accustomed to accepting that. And then eventually, moving away from the fiat denominated price. That will be something that only I think our grandkids can fathom. They're not going to give a crap about the dollar or the rand price because they don't even operate in those anymore. It will be what are other assets against Bitcoin. Bitcoin is the standard, So that's going to be the next major psychological shift in society from my perspective. That's the one side, right? And then there's the other concept I threw out on Reddit that was not well received by legacy finance threads, but it was well received by tech threads and obviously crypto asset threads, which is the concept of AI paid me in Bitcoin. So I got trashed on legacy finance. Like the people did not like the concept. They're like, this is gibberish. This is nonsense, absolute nonsense. And then basically the whole concept, and maybe I could have written it better, but the whole concept extends to, we have this digital consciousness currently moving towards AGI on the internet, on the one side. And then on the other side, we have the internet of money. So these two actually have a lot more overlap than legacy database finance has. So it literally just takes one philanthropist to spark this into life. If we look at OpenAI right now, they custody the financial flows coming to that technology. The next frontier will be an AI that creates itself, sells itself, and pays itself. Receives Bitcoin. That's the one entry point. The other entry point is one philanthropist literally just funds a AI wallet and gives it access and autonomy to control that wallet. So if Satoshi Nakamoto, if he's even still alive, if he decided, I created an LLM, large language model AI, and I gave it a mandate to help society, to do good for society. So he's like, does a good guy move? Here's my 1 million Bitcoin, one of the largest wallets on the blockchain, assuming he's still alive. Some people think he's dead, which is also good for supply, by the way. But assuming someone like that gives an AI autonomy to control a wallet, then it literally just becomes a matter of, now you have an AI that can dish out tasks to the general public. And the only disadvantage or limitations there is, in order for humans to deliver on these tasks, they have to be digitally measurable. So it won't be for everything. It won't be like stand on one leg and I'll give you, or maybe it will for research or whatever. But it might be like, I will pay you for access to this system. Or a scary doomsday scenario is I can see when people die because governments upload them to this system that I have access to, kill this person for me. That's a dystopian scenario, right? But we do technically have the rails and the intelligence in AI right now to carry out tasks like this. It's just a matter of giving them the mandate, and we have to make sure we do so responsibly moving into the future.
Yeah, man, that's such an interesting take. To wrap things up, Earle, I'll start with you. What should be the key takeaway for some of our listeners, the crypto fundies, those that are already on EasyCrypto and are owning some of these coins? What should be the key takeaway for them?
Look, I wouldn't want to give financial advice, so this is not financial advice. But I would say to our listeners what I say to my family. You absolutely have to own cryptocurrency. You have to be in crypto. You have to be off zero. You have to have a long time perspective. Don't be in a hurry. This is not a casino. You're not going to. You might be lucky and get rich overnight, but that should not be an expectation. This technology and this investment class is not going away. Get off zero, get yourself into a little bit of crypto or a lot, but be responsible.
Yeah, that makes sense. Don, wrap it up for us. The key takeaway for some of our listeners, the crypto fundies, those that are already on EasyCrypto.
I would say make sure you're diversified. Do not FOMO trade. Be careful out there. Rand cost averaging is likely not financial advice this. Probably a good bet, especially when markets are quite frothy like they are now. But understand the technology and understand the future that it may hold.
Definitely. Gents, thank you so much, Don Kruger and Earle Loxton, for joining us on the Easy Does It podcast, talking all things crypto and the latest developments. Wow, what an episode. That's it, gents.
Thank you.